Welcome back to the Peak Trading Lab. So in today's video I want to talk about SNRC1. If you've not subscribed to the YouTube channel, consider subscribing because more and hot content is coming your way. SNRC1 is just a supply and demand pattern. In full, it stands for support and resistance continuation 1 for those who never knew about it. So it is support and resistance continuation 1. As the name suggests, it is a continuation pattern, support and resistance, continuation 1. As the name suggests, the SNRC1 pattern is just a continuation pattern. We have SNRC1, but in video it will be all about SNRC1. We have SNRC1 and SNRC2. But in this video, I'll just be restricted to SNRC1. In our next video, we'll talk about SNRC2. Now, SNRC1 just stands for support and resistance, continuation 1. It is just a continuation pattern. Now, what does it mean? Because at least in as much as yes, it is a SND pattern, supply and demand pattern, you have to know whatever it deals or it entails. Now, initially, you can see at this particular level, the market was in a trending environment to the upside, So whenever the market was in a trending environment, it was creating a significant as a resistance and support levels. This is a resistance, support, the resistance broken, becoming support now, etc. So resistance, support, resistance, support, resistance, support, this particular level. Now, whenever the market has broken this support level at this particular point, you must see a certain footprint, and the footprint must be in form of a drop-based drop. A drop-based drop is just a supply level, a base entailing supply level. Now, the drop-based drop must be in the same line with the support level after it has been broken. So whenever the market has broken this support level, indeed it is signaling that potential selling is coming your way. But how did the market break the support level? First of all, it left a significant supply level in form of a drop-based drop. The supply level must come in form of the drop-based drop. Now, the drop-based drop must be in the same line, potentially, let's say, almost in the same level, because the market is never perfect, but at least the best one are always in the same line. So whenever the drop-based drop is in line with the support level and the support level broken, these are support and resistance. Now support turned to resistance, but at least there must be a support level. It is now a continuation pattern because the market now showed a willingness to continue to the downside. So it is signaling that indeed the bears are in control in the market now, and the bulls are now exhausted. So the power lies within the bears, the sellers. So whenever the market has broken the support level with a drop-based drop, at least just left a footprint. There must be a footprint left. So the market left a footprint in the form of the drop-based drop after breaking the support level. Now it has become to a resistance. It has turned to a resistance level now. But now it is in line with the drop-based drop. Now support broken, but it has left a drop-based drop in form of a supply level. So whenever the market retests the drop-based drop that was in line with the support level, at least you take your sells from there. So this is for the sell scenario. Now for the buy scenario, let me invert the scale so that you can be able to see the buy scenario. Invert the scale now. This one now will be a resistance level. I've flipped everything. Resistance, it will be now blue. Now in form of rally base rally. This rally base rally, RBR. So you buy at this particular level. You buy here. SNRC1 now for the buys. Now, initially the market was trending to the downside in form of lower lows, lower highs, now signaling that indeed the market is in a significant downtrend, and the market was forming support and resistance level, support, resistance, support, resistance, support. But now whenever this resistance was broken to the upside, the market left a rally base rally. Now it was housing a demand level at this particular area. So whenever there is a clean break but the market has now left a demand level at this particular point, you wait for the market to retest it, then you buy at this particular level. Now whenever the market taps into it, at least your stop loss should be slightly below this rally base rally, the demand that was created, at least for you to accommodate volatility spikes and so on. So it is not a hard pattern, it is a simple pattern, and it can give you very good and nice entries. So let us look at the charts so that you can be able to see. Now you can see at this particular point we had some sort of a resistance level. Now the marking depends. You can mark the all of this resistance level, but whenever the market had resistance level at this particular point, when it broke the resistance level, this is the resistance level, you can choose to mark the topmost wick, but at least I love marking now the wicks at this for this particular scenarios. Now I like marking the wicks. So from this wick to this upper wick, the market left a footprint in form of a rally base. You can see this base, this demand level, the black one, the demand level. So the market left rally base rally after breaking when it broke, or rather when it broke this resistance level. So just wait patiently for market to tap into the demand level that is in line with the resistance level. You take a buys from that particular point. So this is the SNRC1 scenario. Let us look for another example. Let us look for another example. Now this pattern also works, so at least you must have backtest. So basically it is just either break of the support and resistance, and there must be a footprint that has been left within those levels. Now look at this one. This is the 1 hour time frame. There was this resistance level that was broken. This was the resistance level, you can see, but the market left a footprint, this rally base rally. So whenever the market broke above the resistance and left the rally base rally, you wait for the market to patiently return, at least they must be in line, then you take your buys from that particular point. This is gold, and I like supply and demand in gold. You can see it was a very nice run. So it works, ladies and gentlemen, in any asset class out there. So it's upon you to back test and try. Now look at this one. We had the support level, the market was broken the upside, but what did we have? We had our hidden base, our kissing candle, and I talked about it in the kissing candle video. This kissing candle, the double marubozu kink, the DM kink. So the market tapped into it, so it is just our demand level at that particular point. You wait for the market to retest, you take a buys. It's sniper, ladies and gentlemen, and it won't stop. You know, it won't stop. Look at this one. We had a small supply level this particular point. You can see it was broken, but we had a larger supply level now. So we use pink. So the market tapped into it, this block over here, this one, and it sold off, you know. So it works, ladies and gentlemen. So try to backtest. It works in any asset class out there. Try and backtest and see where it can favor you accordingly, because it's all about backtesting. Sometimes you have to know your pairs correctly where they can work without any stress, you know. So we also had our support level broken at this particular level, this support level. Then we had this also, the DM king, the double marubozu king. So whenever the market tapped into it, you can be a seller, you know. We had support, the DM king or the kissing candle at this particular level. These two posing, you mark the midpoint, you can be selling at least this gold. You can allow just some few pips to accommodate the volatility spikes. Then you ride with the move. It works, ladies and gentlemen. So try and backtest, check on your charts, look, and let us meet in the SNRC2 video. Have a lovely night.